This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices eased on Thursday as investors assessed a potential trade truce between the United States and China, as President Donald Trump lowered tariffs on China after a meeting with President Xi Jinping in South Korea. Brent crude futures fell 42 cents or 0.65% to $64.50 a barrel by 11:36 GMT. U.S. West Texas Intermediate crude futures dropped by 38 cents or 0.63% to $60.10. Trump agreed to reduce tariffs on China to 47% from 57% in a one-year deal in exchange for Beijing resuming U.S. soybean purchases, keeping rare earths exports flowing and cracking down on the illicit fentanyl trade.
State-run refiner Indian Oil is seeking more oil from the Americas, while Mangalore Refinery and Petrochemicals has bought Abu Dhabi crude to replace Russian oil, according to traders and a document reviewed by Reuters on Thursday. Many Indian refiners paused new orders for Russian oil after the U.S. imposed sanctions last week on Moscow's top two producers, with some turning to the spot market for alternatives, industry sources said. MRPL has bought 2 million barrels of Abu Dhabi Murban crude from Glencore via a tender to replace Russian supply in December, trade sources said.
Moving on to the top news in the energy sector.
Australia's renewable energy boom is leaving clean power unused due to transmission bottlenecks and slow battery deployment, industry officials say, signaling challenges across Asia as energy transition accelerates. Wind and solar curtailments more than tripled in the 9 months through September to 3.9 terawatt-hours, or 6.8% of renewable output, data from Platform Open Electricity showed. Curtailments refer to the amount of wind or solar power that could have been produced but was preemptively rejected because a grid hit its limits.
U.S. oil stocks fell last week after crude imports dwindled to their lowest level since February 2021, the Energy Information Administration said on Wednesday. Crude inventories dropped by 6.86 million barrels to 416 million barrels in the week ended October 24, the EIA said, compared with analysts' expectations in a Reuters poll for a 211,000-barrel fall. Global and U.S. crude oil futures extended gains after the data showed larger than expected draws of crude and products. Brent crude futures were up 80 cents, or 1.24%. to $65.20 a barrel at 11:20 a.m. Eastern Daylight Saving Time, 15:20 GMT, while U.S. West Texas Intermediate crude futures gained 71 cents, or 1.18%, to $60.86. Next, we have the top news in metal markets. China has agreed to delay the introduction of its latest round of rare earth export controls as part of a deal agreed between Presidents Donald Trump and Xi Jinping. But earlier restrictions on the critical minerals that have upended global trade remain. Rare earths, 17 elements which play tiny but vital roles in cars, planes and weapons, have emerged from obscurity to become China's most potent source of negotiating leverage thanks to export restrictions introduced this year which allow Beijing to cut off foreign customers dependent on Chinese supply.
Copper prices retreated on Thursday from the previous day's record highs on cautious remarks by the Federal Reserve on U.S. interest rate cuts and concern about Chinese physical demand. 3-month copper on the London Metal Exchange eased 1.8% to $10,978 per metric ton in official open outcry trading, after hitting a record high of $11,200 on Wednesday on supply concerns. Copper is pulling back today because Fed sentiment for a December rate cut is not as strong and Chinese brokers are bearish on Shanghai prices with physical demand lackluster, said Robert Montefusco at broker Southern Financial.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures traded flat on Thursday, following movements in Dalian market and a weakening ringgit, but were set to post a second monthly drop. The benchmark palm oil contract for January delivery on the Bursa Malaysia Derivatives Exchange traded flat at 4,252 ringgit, $1,006.63, a metric ton by the midday break. The contract has lost 2.30% so far in October. The futures followed Dalian while waiting for new leads, a Kuala Lumpur-based trader said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.